It is Sunday, September 11th, and the time is 10:10 a.m. Just wanted to do a quick review on the macros. I haven't done those in a while. The reason is, again, I'm holding a short position in all MES, MNQ, M2K, and MYM. It's a swing position based on fundamental reasonings, and I'm going to hold it for a little bit longer. Maybe this week I'll have to exit because it's expiring, and the new contract is rolling over, I think, sometime this week. So with that said, I just want to go quickly over opportunities that may have arisen. Again, I'm just holding short, but if you're flat and you wanted a new position, here's the chances that you have based on the levels that I had set up. I'm going to go ahead and start off with the ZN, which is the 10-year note. And I'm not holding any position on this one, and I've been looking at it, and it really looks attractive, even though the news seems scary at times to be buying down here. And but I mean, this worked out really nice. This was just set up in here on S1. Would have been long in here somewhere, a little bit above the level. But if you've even taken it up here, and with only 5 ticks worth of risk, maybe 150. Each tick is about $15, 15 something. So it's pretty expensive tick. But if you held it, you had 150, maybe 175 worth of risk or draw, and it moved up all the way to the midpoint for $1,000 worth of profit in about 2.5 days. So this worked out really good. So it's a good chance that I'll be looking at it. Once I exit my short positions, I may be looking at a long here, not long, trading the 10-year note. You could have also, this is the first touch of the midpoint. This would have been a good short as well, and that would have worked out for another $700 at least in here for close Friday. So that's the ZN. Now, if you can't trade the ZN because of the tick value and the size of the contract, the margin on it is actually very good, but the tick value is a bit high. It can be intimidating if you have a small account. You can go with the 10-year yield, and that's inversely related to the ZN. So instead of being a long, you would have been short in here at 3.37 and buy back at 3.21. Maybe 2 or 3 contracts of those would have done okay. You would make much less than 1,000. It would make 1/5 of that or 1/10, depending what size you trade. But it would have been a good trade nonetheless in here instead of the 10-year itself. The CL, I put the CL in here because I get better data, but you'll be trading the MCL. And the MCL, instead of a $10 tick value, I think it's $1. Yeah, it's $1. So over here, this or 125, I think it's 125. I can't remember. The MCL or it's CL oil had went down all the way to S1, and it held well and moved up 500 ticks. Good for either 600 to 500. I can't remember the tick value on the MCL. I haven't traded that in a while, but either $500 or $600 in a day and a half or 2 days worth of trading, and you could have been short. Now, actually, no, this is not the first touch of the midpoint, but you would have been flat here. This would have been Friday anyway. The MES was a little bit different. We had moved up again. I'm short. I'm thinking we're going down. I'm happy here. I'm in the money. I'm expecting it to go down to S1. And I would have exited in here. I really wanted to see that, or somewhere even in here. I would have taken an exit in here. So I can start with the December contract, but didn't quite make it. It came close. Then it started to move up. So as it moved up, you could have taken a short in here. That's R1, and that's good. That's a yellow line in here. That's good for $200. It came in, and this would have been my exit. Those support level, this highs in here. So that's about $200 or so. Then it moved back up again, and you would have been short again here, being Thursday, not quite Friday yet, and it would have given back the profit you had made. It was giving back the 200 back in here. Because it's Friday, you gotta close, you would have closed it in here. So it would have been flat on the, I mean, yes, you would not made any money there. The MNQ, the same thing. You would have waited, or reached out to R1, you would have been short in here, and you would have exited in here for a loss on Friday, not one to hold over the weekend. M2K, the same thing. This just move came out of nowhere. This move up in here seems to be really similar to this move, I think, and I think it's coming back. It's let me find it. This is really similar to this move right over here. It just came out of nowhere. We were going down. No, I'm thinking about this move. Sorry. So we're going down, and obviously trending down. It looks good. Then out of nowhere, this up move came in. That doesn't make any sense. So this out over here is exactly this repeated. Out over here. This is a bit stronger because the selling has been more persistent and longer and more volume. But this basically, this should repeat. I think next week we should see this move right over here going back to this level. Hopefully soon, because I want to exit by Wednesday. So that's M2K. MYM did reach R1. You would have taken a short here, made a little bit, then what you can see would have been a loss as well. Gold, nothing really happened on gold. Just been watching it, still not traded that. The M6A would have done really well. You started the week in here, moved up a bit, down to S1. You could have picked it up in here, and it started to move. If you missed the chance, 1, 2, 3, then you could have picked it up in here somewhere. And that's a pretty decent move. That's I think $1.25 a tick, from 67.05 to 68.70. 705 minus 68.70, that's 165 times 1.25, that's $200 in here. So that would have been a nice trade. And it's textbook. I mean, you could have exited in here for like 100, or this is the better exit in here for 200. And you could have actually been short in here for a little bit of gain on the way back. The M6E did something somewhat similar. It moved up. You would have been short in here, and it would start to move. Then it moved back up. And I don't know. I would have probably taken some profit in here, seeing that there's support in here. Then waited, then picked it up again, either here or here or here for another. What do we have? 1019 to 44, 80, 70 pips, 70 times 125, 70 times 1.25, that's about $100 or so. Then it moved up to R2, and you could have taken a short in here, taken some heat, and would have been up, up some in here by Friday close. M6B was also good. It moved up to R1 and moved nicely down from there. That's from 1580 to 1415. 1580 minus 1428. 28. It's 152 pips times 1.25. That's $190 as well. Then and again, you probably would have taken that, that profit in here at some support, and that's 150 or something like that. Then it moved up. Then would have been long short in R1, and it moved against you. Then added another one in here, and both would have been profitable in here. Then this is Friday, and you'd be out by then. Of course, most probably being a Friday, I would not initiate a new position on a Friday. I would have just held this through and came back and break even. I would have taken it. So the macros did do well this week. I'm just not posting much about them since I am holding a short. I'm waiting to exit that. Still, I'm not going to do anything with stocks. It has not really been worked well with the stocks or ETFs. They seem to be more fundamentally driven than statistical levels. So just a quick brief view of the micros, and once I exit that position, I'll get more active and start trading the ZM as well.